All right, so today we're diving into the world of Eneos Holdings. Their 2023 annual report is out, and we're going to go beyond just thinking about gas stations.
Yeah.
We're going to really try to understand how this energy giant is making its money and what their plans are for the future.
Yeah, it's really fascinating to see how Eneos is trying to balance, their long history in fossil fuels with this really determined push that they're making towards renewables and carbon neutrality. It's a
Mm.
tricky transition for sure. So we'll take a look at how they're maximizing what they've already got, those existing assets, but at the same time, they're building for a very different tomorrow.
Okay, let's unpack their business segments a little, starting with the core of their business, the energy business. It looks like they've got their hands in pretty much every part of the energy world.
Yeah, they've got these four key subsegments that all fall under the energy business. First, you've got petroleum products. This is like their traditional stronghold, refineries, gas stations. But in a world that's really shifting away from fossil fuels, they're facing some pretty serious challenges there.
Yeah, I mean, if the demand for gasoline is going down, they got to get creative to stay profitable. So what's the game plan?
Efficiency and smart pricing, those are key. They're basically focused on squeezing as much profit as possible out of every single barrel of oil they refine.
Got it. So making the most of the current market while it lasts. What about their other subsegments? What's next?
Next up is high performance materials. This one might surprise you. Eneos is a big player in elastomers. Synthetic rubber that goes into everything from tires and hoses to all sorts of seals. And they're not just a Japanese company anymore. They've got 13 plants and 12 sales bases globally.
Wow, so they're competing on a global scale. It does seem like they're setting themselves up for a future where electricity is king. Do they have a plan in place to capture that growth within their electricity subsegment?
Oh, absolutely. They're a major player in both power generation and retail. In fact, you might even recognize some of their brand names like Eneos Denki for electricity and Eneos City Gas. They're even involved in virtual power plants, VPPs, which is like a really cutting-edge way of managing electricity grids.
Wow, okay. It's pretty incredible how quickly the energy landscape is changing. Eneos seems to be trying to cover all the bases.
Yeah.
What about renewable energy, though? I mean, that's the real future, isn't it?
Right. And this is where Eneos is putting a lot of their bets for the future. They recently had a really big win with an offshore wind power project in Akita Prefecture, Japan. Offshore wind is going to be a huge source of clean energy going forward, and this win really shows they're serious about being a leader in this space.
That does raise a key question for me.
Yeah.
How are they planning to balance these ambitious renewable energy projects with their more traditional oil and gas business? Is there a conflict there?
That's the million-dollar question for sure. It all comes down to managing that transition effectively, and that brings us to their oil and natural gas E&P business. E&P stands for exploration and production, so they are still actively out there searching for and extracting fossil fuels.
So are they just trying to squeeze as much out of those assets as possible, or is there more, nuanced strategy at play?
It's a bit more nuanced than that. They're actively pursuing what are called CCNS-CUS projects. That stands for carbon capture and storage or utilization. Imagine you've got a power plant that's burning coal for fuel. But instead of just letting all that smoke go straight into the air, we're going to capture it and store it underground. It's kind of like cleaning up the exhaust before it pollutes the atmosphere.
That's a pretty neat way to explain it. So
Yeah.
they're trying to make their fossil fuel business more sustainable. What about their metals business, though? That seems kind of like a departure from their core focus on energy, doesn't it?
It might seem that way at first, but it's actually a very strategic move. The metals business is broken down into three subsegments: semiconductor materials, ICT materials, and metals and recycling.
Metals. So now we're talking about like mining and smelting.
Yeah,
Yeah.
exactly. And it's all connected. Their semiconductor materials segment is actually a really high growth area for them. They're actually holding the top global market share for a lot of their products, and they're even building new plants to increase their capacity. They're supplying the materials that go into our smartphones and computers, all that kind of stuff.
That's really interesting. It sounds like their metals business is basically supplying the raw materials for their other segments, like the high-performance materials and even renewable energy.
You got it. And their ICT materials segment, ICT, stands for Information and Communication Technology. They have a strong global market share there as well.
Think about all the materials that go into our data-driven society. They're supplying a good chunk of that.
So they've got this really clever integrated approach where they're providing the materials for the technologies that are actually driving the energy transition. It's like they're building the future with one hand while they're powering the present with the other. Exactly. And then to round it out, there's the final piece of the metals business, metals and recycling. This is where they're focusing on sourcing those raw materials sustainably and creating a more circular economy. They're even involved in copper smelting and recycling, which makes sure they've got a steady supply for their other businesses.
Wow, okay, we've covered a lot of ground here. It's a surprisingly diverse portfolio, but how's all of this performing financially? Where are they making the most money and where are the challenges? That's what I'm really curious about.
That's where things get really interesting. Let's dig into the financials a bit. Okay, so let's start by looking at their profitability. The bottom line. In fiscal year 2023, Eneos reported an operating profit, excluding any inventory valuation effects, of 237.9 billion. It's a pretty big jump from the previous year. It shows they're definitely making some money.
Yeah, that's a lot of yen. What drove that improvement? Were there any like standout areas in their business?
Well, a few factors contributed to that. First, the petroleum product market kind of went through this thing called negative time lag. Imagine you're Ineos and you've got this warehouse full of gasoline that you bought at a lower price, and then all of a sudden, global demand explodes and gasoline prices shoot up. You get to sell your existing stock at that new higher price, which really boosts your profits. That's negative time lag in a nutshell.
Okay, so they benefited from some good timing in the oil market. But it's not all about the overall profit, right? We have to look at how each of their segments actually performed.
You're absolutely right. Breaking down the operating profit by segment gives us a much better picture. Their oil and natural gas E&P business did really well. It brought in 91.5 billion. That's a significant portion of their overall earnings.
So the like old school fossil fuel business is still doing well for them. What about their metals business? Is that keeping up?
Metals had a decent year too, bringing in 81.1 billion, but there's a shift happening within that segment. Metals and recycling actually saw their profits decline, while semiconductor materials and ICT materials saw growth.
So the newer, more tech-focused parts of the metals business are picking up the slack. It seems like they're successfully positioning themselves for the future there.
Exactly. Now, their energy business, which is really their core area, believe it or not, they actually posted an operating loss of 6.6 billion in fiscal year 2023.
Wait a minute. Their core business lost money. What happened there? That seems like a pretty big red flag.
Well, it's not as bad as it sounds. A big chunk of that loss can be attributed to their renewable energy subsegment, which is still in those early stages. It requires a lot of upfront investment, building wind farms and solar power plants. It doesn't come cheap.
It's kind of a calculating gamble. They're giving up some profit now to build something that they think will be very profitable in the future.
Exactly. It's like planting a seed. You got to nurture it for a while before you can actually harvest anything. It's also worth pointing out that their electricity subsegment ran into some headwinds. They had an operating loss of 19.7 billion. This was mainly due to fuel cost adjustment factors and some underperforming plants, but they're actively working on addressing those issues.
Okay, so kind of a mixed bag on the profitability front. Some areas are doing great while others need more attention and investment. What about their cash flow, though? Isn't that a really important indicator of financial health?
It's absolutely crucial. And this is where Ineos really shines. In fiscal 2023, they generated a whopping 691.1 billion in free cash flow. That's a massive amount of cash coming in.
Wow, that's a huge number.
Yeah.
What drove that strong cash flow generation? Are they just sitting on all that cash?
Oh, they're definitely not hoarding it. They're being very strategic with it. Their increased profits definitely played a role, but they also made some savvy moves to unlock cash from their assets. For example, they sold off a partial interest in the Caserones copper mine, and they also got rid of some assets within their energy business.
So they're not afraid to shake things up if it makes sense financially. But what are they doing with all that cash? How are they creating value for their shareholders?
That's the key question. Eneos is really focused on generating a good return on invested capital. ROIC is basically a way to see how efficiently they're using their investments to generate profit. So a higher ROIC means they're getting more bang for their buck. They're also keeping a healthy balance sheet with a manageable level of debt.
So they're being financially responsible, but they're also a publicly traded company, which means they need to keep their shareholders happy. How are they rewarding those investors?
Well, dividends are a big part of that. They've kept a steady annual dividend of 22 per share, which gives their investors a consistent income stream.
That's definitely attractive for income-seeking investors. Are there any other initiatives in place that are aimed at boosting shareholder value?
Yes. In fiscal year 2023, they announced a share buyback program worth a total of 50 billion. Basically, they'll be buying back their own shares from the open market. This can potentially increase the value of the remaining shares for their existing shareholders. It's a classic way to return some value to investors.
This share buyback seems to indicate that they believe their stock is undervalued right now.
Mm.
What factors are contributing to that view? Is it just the strong cash flow, or is there more to it?
It's probably a combination of things. They clearly have a lot of confidence in their long-term strategy, and they seem to think that the market isn't fully appreciating the potential of their investments in renewables and other growth areas.
So they're putting their money where their mouth is.
What?
That's always a good sign. But let's shift gears a bit and talk about their long-term vision. They've talked about this ambitious carbon neutrality plan. What does that actually entail? Is it just a PR stunt? Or are they serious about making a real difference?
It seems like they're pretty serious about this.
Mhm.
Essentially, they've set some really ambitious goals for both reducing their own emissions and also contributing to wider efforts to reduce emissions across society as a whole.
So they're not just trying to clean up their own acts. They want to help everyone else get cleaner too.
Exactly. It's a pretty bold vision, and it's going to require them to make some major changes to how they do business. Let's dive a little deeper into the specifics of this plan and see how they actually plan to achieve these goals.
So they're going for carbon neutrality. That's a big statement to make these days. What are some of the concrete steps that they're taking to actually make this happen?
Well, one of their main targets is to slash their carbon intensity by 50% by the year 2040. They're using 2020 as the baseline. Basically, this means they need to drastically cut down on the amount of carbon that's emitted for each unit of energy they produce.
50% is a massive reduction. It's not exactly like switching to LED light bulbs. How are they planning on achieving such a drastic cut?
They're taking a multi-pronged approach. One of their key initiatives is to develop what they call CO2-free hydrogen supply chains. They want to produce hydrogen, which can be used as a clean fuel without releasing any carbon dioxide in the process. This tech has the potential to really change the game.
Yeah, hydrogen is getting a lot of attention as a potential fuel of the future. What about their existing businesses, like aviation fuel? That's a really tough one to decarbonize, isn't it?
You're right, aviation is a tough one, but Eneos is tackling it head on. They're investing in the production of sustainable aviation fuel, or SAF for short. It's made from renewable sources like biomass. They're even doing a feasibility study for SAF production at their Wakayama refinery.
So they're not just giving up on any part of their business, they're finding ways to make all of it more sustainable. Are there any other initiatives that stand out as particularly innovative or ambitious?
They're also putting money into a U.S. large-scale forestry fund. The idea is to use the carbon-absorbing power of forests to offset their emissions. It's not a perfect solution, of course, but it's definitely a step in the right direction.
So planting trees to help soak up their carbon footprint makes sense. But trees alone won't solve the whole problem, right? What about those trickier emissions, the ones we can't easily eliminate?
Yeah, for those harder to abate emissions, they're looking into some more futuristic solutions, like BACCS and DACCS. BACCS stands for bioenergy with carbon capture and storage, and DACCS stands for direct air capture with carbon capture and storage. These are really cutting-edge technologies with a lot of potential.
Okay, those are some pretty big acronyms. Can you break those down for us a little?
Sure. So with BACCS, imagine using plants as a renewable energy source, and then you capture the carbon that's released during that process and store it underground. That way it's not going up into the atmosphere.
So it's kind of like a 2-for-1. You get clean energy from the plants and then you trap the emissions. What about DACS? How does that one work?
DCCS is even more futuristic. It involves literally pulling carbon dioxide straight out of the air and storing it underground. It's kind of like a giant vacuum cleaner for the atmosphere, sucking up all the carbon pollution.
These technologies sound incredible, but are they actually realistic? Are we talking science fiction here, or can they really be scaled up?
That's the million-dollar question. These technologies are still in the early stages of development. There are a lot of hurdles to overcome, like cost and scalability. But the fact that Eneos is investing in them shows that they believe in their potential.
It's definitely a bet on the future. It seems like Eneos is really serious about this carbon neutrality thing. But what does it all mean for the average person? Why should we care about what a giant energy company in Japan is doing?
Well, if we zoom out and look at the bigger picture, what Eneos is doing really reflects this global energy transition that's happening. They're acknowledging that the old ways of doing business just aren't sustainable anymore. Whether they succeed or fail in navigating this transition is going to have ripple effects throughout the entire energy industry.
So they're kind of like a canary in the coal mine, a sign of things to come.
Exactly.
Yeah.
Their investments, their partnerships, the technologies they're developing, all of these things give us valuable clues about where the energy industry is headed. It's like getting a sneak peek into the future of energy.
So even if we're not directly invested in Eneos, we should still be paying attention to what they're doing because it could signal what's coming down the road for all of us.
Exactly. Their story is a really powerful example of how even the biggest companies are having to adapt to this changing world. It really highlights how urgent it is to address climate change and how important innovation is in the energy sector.
It's a pretty inspiring message. They're showing that even these huge established companies can completely reinvent themselves and thrive in a world that's demanding more sustainability.
And it's not just about big corporations either. Each of us has a part to play in this transition. We can make conscious choices in our everyday lives, from the energy we use to the products we buy, to support those companies that are truly committed to a more sustainable future.
Absolutely. Ineos's journey is a great example of how a sustainable future is actually within reach, but it's going to take a collective effort. We all have to do our part.
Well said. Their story is a good reminder that we're not just watching from the sidelines. We're actively shaping the future of energy. And by making informed choices, we can all contribute to a cleaner, more sustainable world.
That's a great point to end on. Thanks for joining us for this deep dive into Eneos Holdings. We hope you learned a thing or two and maybe even came away feeling a little bit more optimistic about the future of energy.
It's been a pleasure diving in with you. Until next time, keep exploring, keep learning, and keep pushing for a better world.